Everybody, the pattern preacher. I like that. Good morning, Sahib. How's everyone doing today? You guys feeling it? You ready? You excited? Rock it like a hurricane? Do all the things that make us happy? You bought a $13 juicer? Really? You thought your old one sucked, Victor? Come on, man. Come on, Victor. What's up, OG? Good to see you guys. I'm excited. Here we go. Remember, this is an educational room. My goal is not to be the boss of you or the trade police. Good morning, Zest. Good to see ya. Hey, Nanda. Man, all the cool kids are back. I love it. Guys, we are talking about reading indicators. But before we do that, let's check news. Today is Thursday, December 11th. Only 14 days left until Santa comes. Santa Claus. I'm excited. Guys, news is already out. Hey, Hamid. Unemployment claims had a little bit of bounce, a little bit of spike, a little bit of giddy up. Nothing crazy, but we knew that the market might go just a little bit nutty because we saw it. We saw that there was high impact, guys. So every morning, that's the first thing I do. I check my news and I time cooking breakfast around it. This morning was pancakes, if you want to be jealous, just a little bit. Learn to read your charts. It's interesting that Ron posted in there, the pattern preacher. I like that. Guys, everything that we talk about here in this room are just patterns. The market does the same thing over and over and over. The market bounces, the market retraces, the market runs, and it does it over and over every day. So what Nexgen has done is spent countless hours and thousands of pictures to recognize a pattern that you'll be able to prove wins more than it loses. That's what we call an edge. Having an edge. And guys, when you have an edge, you can say before you ever enter the market, this is exactly where I'm going to enter because it fits my rules. This is exactly how I'll manage it because it fits my rules. And if I take this trade 100 times without hesitation, with no deviations to the plan, I'm likely to win 70 to 80% of them. That's what we talk about in the room. So I'm going to hand you a checklist. I'm going to do it. Let's get some pew pew, pew pew, laser printer. I'm going to hand you guys plans this morning. If you are a Ninja Trader, it's the Ninja Trader KISS plan. If you are in TradingView, it's the TradingView KISS plan. Is there anyone unfamiliar with what KISS stands for? Keep it simple, sunshine, right? Because trading doesn't have to be complicated. Trading doesn't have to be difficult. Trading doesn't have to be stressful. Trading is boring. Good trading is boring. It's doing the same thing because you know it provides an advantage, guys. So on those plans that I just dropped in the chat box, there are 3 rules for the trade. That's it. Takes 2 charts. That's it. You're learning to read your indicators. Your indicators will begin to shout at you from your screen. They will say things like, you have the best momentum ever. Hey, good morning, Russ. Long time no see, man. Good to see you. Your indicators will tell you that there's nothing in the way. Your indicators will tell you that's where the market's most likely to bounce. All you've got to do is learn to read them so that you can hear the message that you're giving, guys. 90% of your day will be reading your indicators. 90% of your day is waiting for advantages. Advantages create trades, guys. 10% of your day will be actively trading. So a little perspective. If I am in my chair for 6 hours straight, and God help me if I ever am, I might be active 36 minutes of the day. Maybe 36 minutes of the day, guys. But once you learn to read your indicators, once you put those listening ears on, as they would tell you in kindergarten, you're going to understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. Zest, we're in the 90% right now. That's all right. The market's going to open in a couple minutes, guys. Let them do their thing. Let them do their thing. The concepts of likely to continue, likely to go, likely to stop, guys, this is your whole day. Likely to continue is where the market is likely to bounce, continue with a trend. Those are your amazing entries. Where the market is likely to go gives you the opportunity to take those advantages, to say with confidence, with everything in my favor, that line is a great target. And where the market is likely to stop, we call these termination conditions. And termination conditions can stop a trend, can create big untradeable bounces, can reverse a market completely. You'll know about them before you ever get to them. You'll have to make the choice to not trade directly into them, guys. I am not the trade police. I do not give trading advice, but what I will do is help you learn to read your indicators. So we're going to talk about the rules. Everybody can simulate. Guys, post in the room. Post in the room. Tell me what you see. Tell me what you need. Tell me how you did it, why you did it, where you did it. And you get a private session with me. If there's anything that I have in my little brain to help you do it better, I'll give it to you. I promise. And keep it simple. So there's like a two-step process to getting to where you want to be. The first one, post in the room. Guys, the people that post the most typically get to where they want to be the fastest. The people that post the most, the people that say, hey, Mark, this is the momentum, and this is my path, and this is my entry. Did I do it right? These are the people that are moving forward. And if you're on TradingView, hey, Mark, this was the direction. This was the room to targets. Did I do it right? And guys, the answer is most of the time in the beginning, you won't, and that's okay. So you got to learn how to read your indicators. That's my job. Your job is to post. My job is to give feedback. The second thing is keep it simple. Keep it focused, guys. The plans that I give you, the NinjaTrader KISS plan, 2 charts, checklist for entry, how to manage it. Opens the door for a second trade. I think there are 4 things to get you into the second trade, a little more advanced, exactly how to manage it. And then if you're in TradingView, man, it just stays basic. 2 charts, 3 things on the checklist for entry. Keep it simple. Keep it simple, guys. And if you go through that, you'll be amazed at how quickly you get to where you want to be. I'm going to start on NinjaTrader. NinjaTrader, again, 3 rules, guys. That's it. The rules are your lifeline. The rules are your reason for being. Because when you have these 3 rules met, you have a high probability trend trade. Good morning, Miss Trina. And a high probability trend trade is a trade that you can prove through your study. Don't take my word for it. You can prove it typically wins 70 to 80% of the time. Each rule, when true, when factual, not fabricated, creates an advantage. Strong triggers, rule number 1, gives you the advantage of momentum. Now, momentum means that the market is in an established trend and there is so much push behind it that it's going to be difficult to stop. Momentum is a great advantage to have. The second one says no termination conditions. What does that mean? There's nothing in my way. I have room to make money. So imagine, if you will, a freight train loaded down 100 miles an hour, straight ahead, nothing on the tracks, guys. That's your first 2 advantages. Once you learn these 2 advantages, once you can look at your chart and say out loud, I have momentum, my path is clear, you're going to go define an entry. Your entry will pinpoint where the market is most likely to continue. It will create the least amount of risk, the highest profit potential. So a trade is 3 advantages. That's the recipe for a trade. A trade is not your desire to win. A trade is not your desire to be rich. A trade is not your hopes, your wishes, or your wants. A trade is just a pattern that you can prove wins more than it loses. Your large chart leads the way. There's only 2 charts, 3 rules, 2 charts, 5 things to think about. Your large chart, your big chart, your slow chart. Guys, this is like a broad stroke of a brush, and it gives the overall opinion of the market. You'll define the direction of the market, the direction you should be looking for rules to be met. It's just the color. If it's green, it's up. If it's red, it's down. Buy, sell, long, short, up, down, however you want to say it. If you're colorblind, let me know. I'll teach you how to get around that. Your small chart is an entry chart. It's a refinement chart. It takes the advantages of momentum and clear path, and inside of 1 bar, it gives you a pullback to an area inside of triggers and continuation. That's your entry. That's your highest probability entry. That's the entry, that's the pattern. You're looking at it right in front of you. That looks the same every time, that repeats itself, that can be proven to win more than it loses. You've got to be excited about seeing momentum and path on a large chart. You've got to be excited about getting in at an area inside of triggers because, guys, this is the golden goose. We use two charts because we're not in control. All you alpha males, all you alpha females, right? I'm used to being at the top of the heap. I'm the person in charge. I make the rules. I have the answers. Not anymore, guys. Large crowd wins. Large crowd are the men and women that have more money and power than you ever will. They create trends. They establish momentum. They react at areas. The large crowd wins. Your plan is designed to keep you in their good graces. Your entry chart embraces the fact that there's yahoos that think they can beat the large crowd, and they create what's called a retracement, a tiny push down when everything over here says up. Rule number 3 will have you pinpointing where they are most likely to fizzle out and get beaten to a pulp. That's where the market's most likely to continue with everything the large crowd wants. If you remember who you're trading with or against and that you're not in charge, going with the flow becomes effortless. We're going to talk about the indicators that you need to make this magic happen. Trying to hydrate. Hey, what's up, Gab? Good to see ya. These are areas. Areas are horizontal lines on a big chart. That's the easiest way to say it. They all have names. I want to talk about it. And when I talk about the first name, divergence high or divergence low, divergence is a loss of momentum. If you're a note taker, write that down. Divergence is synonymous with loss of momentum, and you're going to see it on your chart as a magenta line at a high, letting you know that the buyers were in control, the sellers told them no, stole their momentum and pushed the market down, or that the buyers were in control and the sellers stole their momentum, pushed the market up. So magenta and cyan lines coming from a pivot are a loss of momentum. We call them divergence. You're going to see Fibonacci resistance, Fibonacci support, yellow 1-to-1s, and even the midband. And guys, all of these areas have a role. On the large chart, this is where the big crowd's making decisions. This is where tops and bottoms tend to happen. This is where giant untradeable bounces come from, where reversals come from. On a small chart, we're going to use some of these areas just to pinpoint where the small crowd is most likely to fail. So all you have to know is the name. The second indicators that we're using do like 90% of everything. These are called trigger lines. Trigger lines are moving averages. When your trigger lines are green, they're going up. When your trigger lines are red, they're going down. Pretty easy. There's two types of triggers. There are small triggers. These are two solid lines. They're the faster of the two moving averages. And then there are large triggers. These are the dashed lines. These are the slower of the two moving averages. You don't have to know that. You don't have to know the math that goes into it. I want you to know that these are small. These are large. Green means up. Red means down. Cool? That's it. That's all it takes. Areas and triggers, guys. That's all we're going to do. And we're going to use those indicators to have the highest chance of success as a brand new user because confidence comes from the memory of success. I want you to be successful right out of the gates. And it all starts with the large chart, the big chart, the slow chart. Large chart must have strong trigger lines. Why? Because I insist, I demand the advantage of momentum. Easiest lesson ever. You guys ready? One picture. When the background is green, the trend is up. The only way rule number 1 could ever be met is if the small and large triggers are green as well. When the background is red, the trend is down. The only way rule number 1 is ever met is if the small and large triggers are red, guys. Little color coordination goes a long way. Well, what are strong triggers? It's one look. When the small triggers are green and they break above the large triggers, when the large triggers are wide, everything's going up. It's that space in between them that lets me know that the odds are favorable for the market to continue up in a downtrend. when the smalls are red, when they're down, when the large are red, when they're wide, it's the space created between small and large that lets me know that the odds are favorable for the market to continue down. Here's your visual for you visual people. I want you to think scissors. If scissors are open, I can cut. That's my advantage. Open scissors, colors match. Rule number one, this is a market that's going to be difficult to stop. This is a market that has the potential to break through key areas. This is a market that's even going to cover some of the mistakes that we all tend to make as new users. Scissors open, strong triggers. Odds favorable momentum. That's got to paint a picture. Well, what happens when the scissors close? What happens when the small triggers work their way back inside of the large triggers? The separation isn't there. Well, they're weak. Strong, weak. Opposites. Odds favorable for the market to continue down. Anything could happen up or down. Guys, as a brand new user, let it be that black and white. When you look at your large chart, small triggers below the large triggers, space between, scissors open. Can you give me a why? If you see that on the most current bar, I can define the trend and the momentum, how easy is that? It's almost too easy, right? That's it. That's your rule number one lesson. I'm going to give you guys a spreadsheet real quick. I'm going to drop 2 in the room. As you learn strong triggers, the easiest way to do it, let me open this up and go to the basic rules. There's about 50 pictures of strong triggers in this spreadsheet. I want you to do this. I want you to take a large chart, which is not that chart, and I want you to snap a picture, and I want you to draw an arrow, and let's write the recipe for strong triggers. Smalls below large, all red, space. You could even say scissors open. Odds favorable momentum, strong, rule 1 met. Not only did I type it, I said it out loud as I did it. So what I'm doing is I'm creating this correlation, this idea that every time I see this, my brain thinks that. If you do this, grab that link, go to your spreadsheet, do it 25 times over the next 2 days. You will be absolutely floored at how you never, ever miss out on strong triggers. You never second guess it. I can't type. You never wonder if it was strong. You don't say, well, I'm just not sure, because what about this, that, or these? That's it. That's your recipe. And then you can do the same thing here. Watch this. Draw an arrow. Write a recipe. Guys, are those strong or weak right there? Smalls inside of large. No space. Scissors closed. Weak. Rule 1 not met. In one picture, I'm a better trader. In one picture, I'm a better chart reader. Guys, if you go through this process, do it 25 times for strong, do it 25 times for weak, you will never wonder if you have that advantage. We good on rule number 1? Pretty easy, right? Separation is strength. My kids could learn that. Momentum is amazing. Excuse me. Momentum is hard to stop. Momentum can break areas. But guys, termination conditions trump momentum. This is your flow chart. If I have strong triggers, then I have to have no termination conditions. I have to have room to targets. I have to have a clear path. Termination conditions are where the big crowd makes decisions. Horizontal lines on a large chart, guys. That's it. When the big crowd gets to Fibonacci resistance, when the large crowd makes their way to Fibonacci support, price reaches an area. Price reaches an area. That's the first part of the phrase. The second thing you do is when price reaches an area, you say out loud, where are my triggers? And if my triggers remain below, I've reached an area that could do 3 things. the area could reverse the market completely. If it does, we're going to call that a strong top, and we're going to call that a strong bottom. And a strong top or bottom is the precursor to the highest, best of the best trend trade you could ever take. But it's not mandatory. That comes into play for the second trade. It could, let's get rid of these. It could also create an untradeable bounce and then continue. It could create a big bounce and then continue. This is a trade killer. This is a money taker. This is an unnecessary avoidable loss. Or it could just smash right through and go the distance, guys. The reality is you're not in charge. You'll never know. They're not going to send you a memo. They're never going to say, hey, Jerry, guess what? When we get to 83 and a quarter, we're going to go ahead and reverse. You're going to want to not trade into that area. Or hey, Gramps, when price reaches Fibonacci resistance, we're blowing right through it. Hold your position. You'll never know. So if price reaches an area and the triggers don't break, sit on your hands. Wait for the reaction. Wait for the large crowd to tell you what they're going to do. Once you learn how to define a termination condition, guys, you're going to find that it's a lot easier to not get your butt handed to you. Pulls back to one-to-ones. All the triggers are above. There it goes. Fibonacci support holds. Fibonacci resistance holds. Divergence lows hold. Fibonacci resistance holds. Fibonacci resistance. Fibonacci support. Fibonacci resistance. Fibonacci support. Support, resistance. Egads and little fishes. You know where all of these areas are. And right now, woo, there's nothing in the way. I've got all the momentum in the world, and price has not reached Fibonacci support. That's good stuff, guys. That's go look for entry stuff. Is everybody good on the very basic? Price reaches an area, no triggers break, sit on your hands, relax. You're going to be okay. Wait for the reaction. Well, if it doesn't reverse, if it doesn't create the big ugly bounce, well, then it's probably breaking. Here's what it looks like when an area breaks. Just a heads up, they break all day long. I can't predict it, but it does happen. So number one, price reaches an area. Trigger lines remain above. Guys, every line that you reach will be a termination condition for at least a split second. It doesn't say that you have to exit your trade. What it says is, hey, don't initiate a new one. Wait for the reaction. See what happens. That's what rule number 2 is designed to do, to keep you out of that trouble. If it's really going to break, guys, your triggers tell the story, not price. Areas breaking has absolutely nothing to do with price for the highest probability trend trade. It has everything to do with the triggers. If your small triggers smash through that area, I mean smash. Little prairie dog peeking doesn't mean anything, guys. They are down, point or two. And you have that separation, you have the strength. This area has the potential to break. This is what we call a 50-50 look. 50% of my triggers are through, 50% are not. It has nothing to do with your odds of winning. With the 50-50 look, this is the second trade on your plan. This is the plan that allows you to take trend trades with established rules, not with a clear path, but rather with only the potential to break. You can increase the likelihood of success by insisting that 3 of the 4 trigger lines are below support. There's a plan for that. But once all 4 trigger lines, both small, both large, get below support, support's now broken. Support actually behaves as resistance. I'm going to do something real quick. I want you to see this. Hot pink line, right? It doesn't matter if the fib is blue or red. It just doesn't. Trigger lines will tell you what you need to know. Don't get caught up. Oh, my fib turned blue, it must be support. My fib turned red, it must be resistance. Hell, my fib could be black. Trigger lines will tell me everything that I need to know about that area. So first it's a termination. Cool your jets. Wait, relax. 90% of your day is waiting. Then it has the potential. Let's go rock star on it, but let's lean on momentum. Let's make sure that the entry is perfect. And once it's a clear path, guys, it is guns a-blazing. I can't wait to find an entry. That's the best of the best. And guys, your path is clear until You guessed it. You reach the next line. And then once it reaches the next line, I'm right back to number one. They break up too. Do you guys know that you can make money both directions in futures? How cool is that? It's like having an Italian buffet on one side and Chinese on the other. Life is amazing, guys. But every time price reaches Fibonacci resistance and all 4 trigger lines are below, I'm going to sit on my hands and wait for the reaction. I can't predict. I've almost figured it out. I'll show you guys. You're going to love this. This is almost foolproof, but it still has a couple kinks in it. Will price, oh my gosh, what was that? Holy wow. Will price break? Guys, if you can type fast enough and click on the 8 ball, maybe, oh, my sources say no. Shoot, back into the 90%. That's about as good as I've gotten. But when that doesn't work, I'm going to count triggers, guys. No triggers, no trade. 2 triggers, potential. 3 triggers, better. 4 triggers, let's go. Let's take that momentum. Let's take that clear path. Let's find an entry, assuming the rules are met. Had this talk yesterday. There will be times when your path isn't clear because areas are stacked. Show of hands. Who's ever looked at the market and said, dang it, I can't get a clear path. It's just not giving it up. And then 20 minutes later, it's the perfect trade, right? Guys, in the moment, you're going to feel like this is the end of the world and you're never going to get paid. From support, and you're like, oh, 2 triggers through, dang it, it reached the next line. 2 triggers through, dang it, it reached the next line. Guys, this is 90% of your day. Trading is boring. Successful trading is so stinking boring. But it works out if you stick to your edge, guys. The futures markets trade an average of $220 billion hourly exchanged between the markets. Your S&P market typically exchanges $174 million daily. The NASDAQ typically exchanges $269 million daily. It takes $400 a day to be a 6-figure trader. You don't have to be in every move. You don't have to grab every tick. You don't have to be the first one in. You don't have to be the last one out, guys. Your job is to be the person that says, you know what? My money's worth the easy trade. My money is worth not trading into areas. My money is worth having momentum. My money is worth getting out of trouble because I'm in this game to get paid. This is my business. This is my livelihood. So guys, this is the easiest trade you'll ever take. Momentum, path. Does everybody see that tail? We're about to learn how to predict where those tails are most likely to form, but we can't do it on a large chart. It's too slow. What we're going to do is we're going to go to a small chart, and we're going to learn one phrase. Well, we aren't. I know it. I'm going to share it with you, though, because I don't like keeping secrets. If you learn this phrase, I'm going to tell you this right now. You're like, oh my gosh, Mark is giving me everything that I need to be successful. What a wonderful person. If you learn this phrase, I'll even drop it in the room for you. Print it out, put it on your desk. I'm going to buy or sell a pullback, which means, all that means is that I'm not just going to jump into the market, right? I'm not going to hope it doesn't stop. I'm going to force the small crowd to push against everything that the large crowd wants. So I'm going to buy or sell a pullback. And I'm going to wait for that pullback at an area, at a fib, at a mid-band, at a yellow 1-to-1. Because the same way these areas can stop forward progress on the large crowd, on the large chart, they can stop the small crowd. That's where the small crowd is most likely to fail. But there is the most important part of the phrase. Inside of triggers, inside of large triggers, guys. Large triggers show you where the area needs to be to buy the pullback. Large triggers are moving averages. Price, returns to moving averages. It's called regression of the mean. It's not important. I'm not a math fan. But what it means is that when the market is going up, when the path is clear, when life is good, when the small crowd starts to fight, you can say their fight's most likely to go to these large triggers. That's the retracement zone. And then you're going to say to yourself, hopefully out loud at first, Triggers aren't bouncy. I need an area. I need Fibonacci support. I need a mid band. I need yellow 1-to-1s. But they have got to be in that retracement zone. That's where the advantage lies. So let's go through. This is your pattern. Reversal bar begins the pullback. And remember, right now, before we ever take this picture, the large chart is up. The large chart is screaming in the direction of the trend. There's absolutely nothing in the way. We're relying on a tiny little fluctuation on a small chart to get us the best entry. Reversal bar begins the pullback. It's not your entry. Reversal bar is actually a loss of momentum that hopefully gets us to our entry. If you jumped in, if you were terrified that it was going without you, that's a great exit condition. Reversal bar begins the pullback. I know with absolutely no uncertainty, the pullback is most likely to go down somewhere from the top of these triggers to the bottom of these triggers. So the closer they are to one another, the smaller that range becomes, the more accurate my entry becomes. But I also know that trigger lines aren't bouncy. They're like clouds to a skydiver. I need areas. I need mid bands. I need yellow 1-to-1s, or I need Fibonacci support. But guys, Fibonacci support is not in the retracement zone. That's not where my entry comes from. So I've got two options in one zone. Creates a window. Let's call it the window of opportunity, right? I love that. This is where, inside of this blue shaded box, the market is most likely to bounce. The market is most likely to continue in the direction of the large chart advantages. Because of the momentum on the large chart, your job is to activate a limit order just above the highest point of support, closest to the reversal bar. And you're just going to say, they've got to come get me. What happened, Claire? Did you just wake up and realize you get to spend another morning with me? And you're like, wow, this is amazing. You know what? Don't tell me what the wow's about. I want to believe my version. Guys, pull back to the area inside of triggers. Learn that phrase. That's where your trade comes from. That's the best of the best. Anything below the retracement zone is beyond the area for entry. Anything below those triggers for a long trade is where the market shouldn't go. That is where your advantage is gone. That's where your stops are going to be placed. You'll know precisely where you're going to enter and where you're going to cut ties with that trade before you ever enter the market. In a downtrend, trend is down, momentum is strong, path is clear, life is good, let's go find an entry. Reversal bar begins the pullback. Not your entry, just an indication that the fight is on. Where's the fight going? Somewhere, most likely from the bottom of the triggers to the top of the triggers. That's it. That's your retracement range. I need something solid for the market to bounce off of. Mid-band. One line, one magical moment inside of those triggers. My limit order goes a tick or two below it. That's my entry for the highest probability trend trade. And I understand fully any line beyond those triggers on the wrong side of the triggers is not at all where I want to take an entry, because once I get beyond those triggers, my advantage is gone. Guys, where the market should not go is what you're defining by understanding where the market is most likely to continue. This is it. This is trading. That's it. 3 rules, 2 charts, 1 pattern. This is from the 6th of November. Give me a Y if you're with me in here. Do you see momentum? Smalls above the large, space between. Market's going to be hard to stop. Yes, that's easy. I've got 2 triggers through. Guys, the market is trading all the way up here. Everybody that's new is like, man, this stinks. I've got like 6 ticks before I hit trouble. I don't want to take a trade for 60 bucks. That sucks, right? Guys, we're not getting in up here. We're waiting for the pullback to the area inside of triggers. All of the sudden, I've got $300. $300 to get to trouble. Great entries, increase profits. But here's the other thing. Because I'm getting in low, I've also reduced my risk. Guys, we don't trade tails. By the time you know this tail exists, the market's all the way up here. You missed your trade. We are anticipating where that's most likely to form. We're pulling back to an area inside of triggers. Guys, this is one pattern. Strength path entry from 2021. Strength, 3 triggers through, pull back to an area inside of triggers. From 2022, strength, 3 triggers through, pull back to an area inside of triggers. If you go through the spreadsheet I gave you, there's like 500 pictures. Let's pick a random one. Strength, 3 triggers through, pull back to an area inside of triggers. Even using the phrase where the market should not go. I love it. High probability trend trades are your foundation. High probability trend trades are your best of the best. Teach you to read your indicators, teach you to learn how to get paid, how to manage a trade. And once you understand that, guys, you begin to break out for even more. So as class goes on and we watch it, we're going to look for high probability trend trades. And if one comes to play, guys, we'll take it in the room. We'll talk about it. We'll manage it. If we get one of those 50-50s, 3 out of 4 triggers through, we'll follow a checklist that keeps us in line with having an edge. We'll manage it accordingly. And now we're going to go to TradingView. Are there any questions about high probability trend trades on NinjaTrader? It's just repetition, guys. Rinse and repeat. Learn the rules, piece them together, practice lots. SMs, I'm going to read your message out loud, hoping that there's nothing really crazy in there. I bought an automated trading system from a developer. I've been using it for about 4 months now. It's built with advanced, blah, blah, blah. It adapts to your account size. What stands out to me, hold on. I want to make sure you're not selling something. Forgive me. It adapts to any account size. So what do you, trend levels only. Hey, SM, get bent. What a horrible thing to do, to come into my classroom and try and sell shit. You're blocked. You're disconnected. Guys, don't do that. That's ugly. Don't walk into McDonald's trying to sell a Whopper. What a messed up thing to do. Shame on me for reading so much of his. He keeps trying to jump in. SM, get the hell out of my classroom. You don't get to be here. You don't get to be here. Hold on. We're going to get him out of here. We're going to get him out of here. It's I don't know if it's AI or not, but you don't get to do it. You don't get to do it. Give me 1 second. Let me send him to my trade police. Hey, look, I took a picture of someone else's car, and now I'm an awesome trader. There we go. Got my police on them. Guys, I'm all for everybody doing great things. You don't get to sell in my room. You don't get to talk in my room like that. That's not cool at all. He's gone. He just got removed. TradingView, my friends. Let's talk TradingView. You guys that are in the funding company, I'm about to give you the easiest way to pass your evaluation. I think Cam's in here. Cam got him. Cam is like 6'8", He's 37 feet wide and he hates bots. Man. Guys, the only indicator difference between TradingView and NinjaTrader really is that we don't have fibs on TradingView. The programmers haven't been able to put it together. But what we do have are these zones from Chart Prime. I think I pay $50 a month for mine. Worth every penny. I believe worth every penny. If you don't feel like that investment is worth your time, that's your right. Let me know. I'll try and steer you towards some free options, but I haven't found anything as good. Two charts, big chart, little chart. Big chart wins. Big chart leads the way. Big chart defines direction, momentum, key targets, terminations. If your big chart doesn't say look for an entry, no reason to ever go to the small chart. But if it does say go look for an entry, guys, your 1 minute chart is going to define your entry. Your 1 minute chart is going to define the immediate strength of the market. Guys, this is your entry point, only when the large chart says. So there's two things, and I really need to change this up. There's two things that you really have to go to the small chart. The first thing is you have to define the direction of the market using the small triggers. They're either down or they're up. Is everybody good with that? Your market is either going down or up. If I can't tell if they are going up or down, man, I can't type. That's my 90%, guys. That's my sit on my hands. That's my do nothing. That's my why on earth am I trying to guess when it's so much easier to let it be just clearly defined. The second thing that you have to do before you go look for an entry, if you're following a plan, is have room to trouble. That's it. What direction is the market going? Do I have room to make money? Is there anyone that feels like that's going to be a tough concept? Watch this. What direction is the market going, guys? Up or down? It's down, right? Please tell me you guys see it. If you don't, let me know. We'll work on it. From where it's trading, do I have room to trouble? Well, not anymore. That's it. I just don't have room. How easy is that? Guess what? Go walk the dog. Define direction with the triggers. Define room with the distance from price to something bouncy. Now there's one more thing you can add. This is management. This is not telling you the likelihood of success. This is not giving you good or bad indications, guys. Where the most current price is in relationship to the trigger lines is defining the momentum of the move. If I am left of the trigger lines, it's the strong side. Maybe bigger moves make sense. 1 minute areas are more likely to break. If I'm below the triggers, to the right side of the triggers when they're up, this is the weak side. This is where it just makes sense to get paid at trouble. Be okay missing the move if it breaks. Get paid, get out before something bad happens, because the weak side of the triggers, above them when they're down, below them when they're up, guys, this is where reversals come from. We're going to use that same logic to enter trend trades. And if we're inside of the triggers, split contracts, I'll get paid at 1 minute areas. I'll get to break even when I reach 1 minute areas, but I am not shy about holding to see if it wants to break and go to the next one. Management, you'll know exactly how you're going to manage a trade before you ever enter if you just say I'm either left, inside, or right of the triggers. And then there's only 3 rules for entry. That's it. A trend trade is 3 rules on 2 charts. Have I mentioned that? 15-minute, big chart, not trading directly into areas. That's rule number 1. Is rule number 1 met on this chart? What do you guys think? Let's take a picture. Can everybody see that that is a zone, that that's an area that could stop the market, that could create a bounce, that could create a reversal? And the reality is I don't know what the reaction is going to be, so I don't have any rules met, not even going to the small chart. But if it were clear, let's use our imagination. I have to make sure that the 1 minute chart isn't trading directly into areas. Why? Because it can create a bounce that pulls me out of a position. So really, really insisting on that clear path, guys. These are 1 minute bars. And then the entry is the same entry every time. But Mark, what if? How do I break my rules? The most common question in the room, Phil. But Mark, let's say that my rules aren't met. How do I get in anyway to make money? I love it. Everybody's asked me that at least twice. Guys, we're going to buy or sell a pullback at a 1 minute area. Now, memorize the list. It can be a zone. It can be a 1-to-1, yellow or pink. It can be a mid-band. If it's not one of these three things, your rules aren't met. Outer bands are not on the list. High volume area lines are not on the list. That's it. But you have to have a close on the weak side of the small triggers when you get there. Why? Because reversals come from the weak side of the triggers. And you want the small chart to reverse and go in the direction of all the large chart advantages. So here's your trade. Small triggers are up. Can you pull up that last slide real quick? I can do anything for you, Phil. This one right here. There you go. There's a copy in the room. You're so welcome. When my large chart is up, when I have room to targets, what does transition tell me? How to manage, right? Transition tells me that when I reach an area, I may choose to take partial profits and get to break even, but it doesn't necessarily mean that I'm going to exit my full trade. That's what transition tells me. Guys, the moment the small triggers roll down, the second the small triggers roll down, your job is to look lower. Find an area. Find 1-to-1s, find a zone, find a mid-band, put a box around it and say this is where the market needs to get to. Once it gets there, we're not just jumping in, guys. Small triggers on a 1 minute chart are strong. They can whip you 32 ways to Sunday, or whatever the phrase is. So the entry is an up bar, a reversal bar to the upside in the direction of your trade. And that reversal bar finishes both corners above those small triggers on the weak side of the small triggers, because reversals come from the weak side of triggers. Reversals on the small chart put us in the direction of the large chart. So it's the same look every time. Triggers roll, define your area. When it gets there, close on the correct side of the triggers. Do you guys see how here it never reached the area? They know about it. They want to be to the area. This is like expecting a tennis ball to bounce before it hits the wall. Sorry for the trauma, Phil. Triggers are down. I'm going down with them. I'm on the strong side. I know how to manage when I get in. I've got room to trouble. Let's do this. Uh-oh, small triggers rolled. Let me look higher. There's a zone. There's a mid-band. There's 1-to-1s up here. There's my area. Price reaches it, as it does. Down bar, weak side of the triggers. Let's write it down to Profitville, population U. Guys, your trend trade entry is the same look every time. Your trend trade entry means that the small triggers turned against you. I identified the lower area. I get in on the weak side of triggers. Are there any questions? Once you learn the trend trade, guys, life's pretty good. Triggers are down. I am on the strong side, and now I've got nothing but room to trouble. And you're right, it only takes one solid trend trade to set up a day to make career trading. It's the same read every time. My ninja is still alive. All right. You guys want to see something cool? So let's go through it real quick. Let's go through the idea that in order to take the perfect trade, in order to take the best of the best, the highest probability, the most wonderful trade in the world, I need momentum path and entry defined. Are we good with that? So we're talking about the most current bar. Help me out, guys, especially if you're new. Does it have momentum? Can I say with confidence that the odds are favorable for this market to push down? What do you think? Separation between the small and large. You guys want to annotate it together? I think we should. Let's annotate. So let's say small's below large. Colors match. Space between, odds favorable momentum, rule 1 met, just feeling good, right? And now I have to go into rule number 2. And I can say price didn't reach an area. Triggers below previous area, like for days. Does everybody see that it is a clear path? That rule 2 is met? Now go look for an entry. That's not so hard, right? That's one bar telling me that the market's more likely to go down than up. That's it. That's an edge. Now here is where learning that phrase is going to be the best thing that you've ever done. So I've got momentum. I've got a clear path. Now my entry rules are very specific, guys. I'm going to sell a pullback, even if I can't spell it. I'm going to sell a pullback at an area inside of triggers. Has everybody memorized this one so far? I'm going to sell a pullback. What's a pullback? It's a small push when everything here says down. What's an area? Fibs, mid-bands, yellow 1-to-1s. What does it mean to be inside of triggers? Well, it means that from the top of these triggers to the bottom of these triggers, I need a fib, a mid-band, or a yellow 1-to-1. Guys, does anybody see a fib, mid-band, or yellow 1-to-1 inside of that shaded area? No. It's on the wrong side of the triggers, isn't it? It's where the market shouldn't go, which means that I can't define an entry, which means I've only got 2/3 of my advantages, which means no matter what I say to myself, best case scenario is that this is a medium probability trade. 2 out of 3 of my advantages. Well, how do I work around that as an experienced user? Well, there's a couple things you can do. You can force the market to go in the direction of your trade before you enter. That's one way you can do it. Doesn't guarantee a win, right? Didn't. It came right back up. Or you can say, you know what? The futures markets trade billions every day. I probably don't have to be in every move to reach my goals. I probably don't have to take every opinion, every hope, every wish, every want to win. S&P reached Fibonacci support. There's the bounce. Wrong side of the triggers. Sure enough. I don't know what that means, Victor. You just saw another slide of a zone where it was about 20 ticks lower. I'm not sure what you're talking about. They're cranking, right? Strong side of the triggers. Look at the 1 minute areas break. Not guaranteed, but they were more likely to. Guys, sometimes it's just not your trade. Sometimes it's just not your money. But the cool thing is that if you start talking, oh, right on. If you start talking out loud, this is what's working for me. If you start talking out loud, this is what's working against me. Guys, you're in control of the entry. Nobody can make you pull the trigger if it's not right. Knowing what's working for you and against you, what it does is it helps you make good decisions based on entering a trade. You can say to yourself, my rules are met, my rules are not. And then you're going to know how aggressively that you may need to manage it. Now, I wanted to share something. I've said this a lot, and I received an email yesterday from somebody that said, I've started doing it, and it's made a huge difference in my life. I tell you guys to talk out loud when you're trading, to really articulate, get vocal. Don't be afraid of scaring the pets, guys. Say it out loud because you're listening. You're listening to you, and when you speak out loud, it significantly increases self-awareness. It forces you to process thoughts more deeply, to regulate emotions, to clarify intentions, and understand your own motivations, acting as a form of mindfulness to make internal states external and manageable. Guys, if you're talking about your advantages, you start getting excited about trades. But if you're talking about disadvantages, your brain is listening. It's more likely to embrace the 90%. It clarifies thinking, it regulates emotions, it increases focus, guys. Verbalizing your inner monologue helps you recognize your own motivations, assumptions, negative self talk. It boosts self-management, better problem solving, enhanced motivation, improved performance. I can't stress this enough, guys. I love patterns. I'm a patterns guy. I'm an artsy fartsy kind of guy, but I am blown away at the psychology of trading and how having such a solid plan, when you get the mindset right, guys, it'll change your life. It'll change it for the better. I am going to take a break. You think the term advantage is more helpful than probabilities, thinking in terms of advantages instead of probabilities. Um, so, Phil, can I address that? Of course I can. It's my room, right? So let's do this. Let me just, and I'm going to type it out because it helps me think. So when you speak in terms of advantages, right, I can say when I have momentum, when I have a clear path, when I can define my entry, I have a recipe that I can prove wins 70 to 80% of the time, right? So there's your advantages. Because of the advantages, I have a pattern that I can prove 70 to 80% of the times. And then that is what takes you to probabilities. If I follow my rules and win 70 to 80% of the time, that's where probabilities comes in. It means that I have to take 100 trades, right? Or I have to take 20 trades. I know that I will typically win, oh, here comes math, right? 14 of them. I will typically lose 6. I don't know which I will win or lose, but there's that word, probabilities says I will win more than I lose. So one begets the other, right? When I have this, I have an edge. That's that magic word. I have an edge. I have a pattern that's proven to win more than it loses. Because I have proven that it wins more than it loses, probabilities are in my favor. If I take 20 trades, I don't know the dispersion of wins versus losses, but I do know that long term, I should win more than I lose as long as I stick to my plan. Does that make sense, everybody? Trina, you've started talking out loud. It's more than a whisper. It's awkward to sit in a room by yourself and talk out loud, isn't it? That's what crazy people do. Don't be crazy, Trina. But it's not. Do it. My dog gets so stoked when I say odds favorable momentum. My dog's ears perk up. It really is helpful. Guys, every time I share something with you like that, it's not because I hope it works. It's because it's worked for me. It may not work for you, but it's worth a try, right? Phil, does that make sense though? Because of the advantages, the probabilities are in my favor. I love it. I love it. Organic, they are working hard. John Novak and I are in discussion every day about the things they need to program in. But we're taking people that don't trade and trying to translate, but they are working hard. And John and I have had discussions every day for the last 2 weeks, getting us closer to that final goal. No worries, Ron. All right, guys, that's my first hour. Um, it's the first hour all the time. You're welcome. We're all excited about it. I'm so stoked on it. John and I have done a lot of study. John more than me. I get to be the sounding board because I lean towards conservative and he leans towards aggressive because he's so stinking good at what he does. So we're getting there. All right, triggers down. Strong side of the triggers. Guys, if I got a pullback up here, I could justify a short trade, but I have to wait for my rules to be met. So when I come back, let's see what that did. Bounce, bounce, bounce. S&P's going kind of nutty, isn't it? Hey, look. Oh, wow. Once I get to the wrong side of the triggers, I don't know if, when, or where the market's going to stop. Guys, if you ever see your triggers going wonky like that, reload historical data. It'll come back. This is NASDAQ. NASDAQ's fast. But you guys see how it got above the synthetics and the large and it just didn't stop? There's nothing worse than saying that area should hold. That area will hold. That area has to hold. Just wait for it to be right. Is it still coming? It's coming. Here we go. Weak triggers, there's a retracement, right? Strong triggers, I wonder if that was an entry. We'll come back and check that. You guys want to watch the NASDAQ dance while I take a break? I'll see you in a few minutes, guys. Go stretch your legs. Get away from your computer. Stop staring at it, especially if you haven't had a trade in a while. I'll see you soon. It's knocking my triggers out of whack. That's crazy. That's fast. I'm just going to lose the NASDAQ, guys. Let's go see what's going on. Crude oil, look at that. Once you get to the wrong side of the triggers, I don't know if, when, or where. Did everybody learn that lesson? No matter what the large chart says, once it starts getting to the wrong side of those triggers, guys, things are changing. Can't stress that enough. NASDAQ reached an area. Can't go short. You lose your advantage. That's it. Thank you, Phil. I knew somebody listened to me. I knew one of you were listening. So guys, I'm going to go through and I'm going to click on the pictures that have been posted so far today. Here's a reminder, and you know what? It's a slower day in here, less posts. So I want to do this. I'm going to read this. I hope you guys don't mind listening to me because I do like to talk a little bit. This is an actual email reply. I had someone send me an email after watching us go through chart reviews in the room, and they were mad as hell. Phil broke the rules, Gab broke the rules, Trina broke the rules, Alex broke the rules, Claire broke the rules. And they were so upset that everybody wasn't only taking high probability trend trades. Because Mark said, here's your high probability trend trade. Guys, the high probability trend trade is your first trade. It is the trade that opens your eyes to other opportunities that the software provides. So the key to everything that we do, this is my reply. The key to all of this is having a foundation, understanding the basics. What are the basics, guys? If you don't understand momentum, path, and entry, you don't have the basics yet. That's okay. Work a little harder. Learn it. So for you brand new users, I blanket very conservative rules, recognition of advantages, and a solid plan that optimizes the chances of success as you learn to read your indicators. So for new users, all termination conditions are bad. No momentum is bad. Areas beyond large triggers for entry are bad. These are blanket rules because they increase the likelihood of success, guys. They're not always bad. Until you have the experience, the time, the repetition, the study, the practice, the feedback to know when to use exceptions, it is the highest probability way to use the software. So just like anything, the more time you spend with it, the more you're going to see, guys. That's when doors open. The better you get at your chart reads, the more opportunities you're going to see in the market. You must learn the process that yields the results. The results seem to follow. That's where the KISS plan comes in. If you keep it that basic, if you follow simple rules, if you're okay not looking for all the trades, only the best trades, you can find an extraordinary level of success. Guys, I've been watching it for years. The further new users deviate from simple, the longer they take to learn how to be comfortable with pattern recognition. So question everything. Everything. I encourage it. I want you to learn, but give yourself a little grace. You're new. It's okay to be. That was a reply to somebody that wanted to be the trade police. Guys, I am not the trade police. I will never be the trade police. So if you see trades in the next hour that don't fit the rules, that's their trade, not yours. If I pull the trigger, it's going to fit the rules. Sergio says, Mark, is there any setting on NinjaTrader that you could put on the chart, keep moving with the prices and bars? You don't need to keep shrinking. So Sergio, on NinjaTrader, see that white arrow? See that F? If you click the F, it'll center. You'll never lose your bars. If you click this area, it'll butt it up. This is your basic view. So you can squeeze it this way. You can pull it back this way. But I haven't found a way, Sergio, to keep it dead center without losing it. So if I click F, it goes back to this and I can't see the fib below. Is that what you were asking? Because, so for me, Sergio, when I trade, I tighten it up a little bit and I'll do that. And I'll center it. And I'll do that so I can see what's above and below. But once I'm in that trade, make sure I'm on simulator. If I'm going long and I can't see, it'll keep my targets in place. And if I move my targets way up, watch. And I'm like, man, I can't see my other target. If I click F, I can see my other target. So yeah, you'll have to, if you're not comfortable with this view, you'll have to scroll. You'll have to move it manually. I haven't found a way to keep it the way you're asking. Cool. All right, guys, let's look at some pictures. What do you say? So everybody's good, right? I'm not the trade police, don't want to be the trade police. I refuse to give trading advice. I won't tell you what to do, when to do it, where to do it. I'll just teach you to read indicators so you can make amazing decisions about what it is you're doing so that you can know what's working for you, what's working against you. You'll have a complete understanding of the advantages in place and the advantages that you appear to be forfeiting. And then it's up to you to make those decisions. Trading is an individual sport, guys. It is a lonely sport. It's a boring sport, but when you do it well, it will absolutely change your life. All right, here we go. Large chart. Weak top, triggers just beginning to roll. Price reaches Fibonacci support. So we're getting in. So Pete, one of the things you love to do to me is you love to point to things. The long, I don't know why. Looks like it got you out break even, maybe a small loss. There's got to be a point where there's just no momentum, there's just no areas, there's just no room. It's kind of a hope trade, but great recovery. From the three divergences, you ride the momentum down to trouble. And your exit is beautiful, Pete, because when you reached Fibonacci support, the large triggers were a full bar away. It was likely to close the gap to those triggers. OG, was it you that we were talking about the gap theory the other day? Oop, I think OG left. Nope, maybe didn't. Remember when price reaches an area and those large triggers are above the reversal bar? Pete knows it. What an awesome exit before it had a chance to close that gap. Nice job, Pete. Momentum. Let's see, 58, 58 up here. All the momentum, potential to break, get above trouble, get paid quick. It's just momentum. Get out when it starts to lose it. Beautiful trade. Momentum and the potential to break. Pete says, you know what? I'm going to try to catch the move before the reversal bar. That's all it is. With all of this momentum, I'm going to see if I can grab at least $100 out of it. Because $100 times 4 is a six-figure income. Nicely done. Momentum, potential to break, pull back to the area inside of triggers, get paid, get paid. Awesome. What a great recipe. 2 triggers through, all the momentum, pull back to the area inside of triggers. I mean, Pete, you get the microphone tomorrow. You're teaching class. All the momentum, termination. It's a termination, 100%. So check it out. Let's talk about something pretty awesome. If the perfect trade, if the ideal scenario, if the most wonderful moment in your life means that you have momentum, yes, he has it. It's there. His entry area is clearly defined. Somebody help me out. Trading directly into an area with no triggers. It's a termination, right? It's an advantage gone. It's not a clear path. It's 2 out of 3. It is take and manage. And Pete took, and nothing ever changed. No need to manage. He took a medium probability scenario. Look at that entry, guys. By the time it went down, he had like 3 ticks of risk on it. When you understand what's working for you, all of the momentum, 3 divergences, everything, and you know what's working against you, there's some trouble that could create a bounce, you'll make the decision. I will take this trade. And Pete knew full well that this could have just pushed up and rocketed to the moon. But Pete said, you know what? 2 out of 3. I like where it's coming from. I got some room back to the first sign of trouble. Let's do it. Let's make it happen. And you did, Pete. You made it happen. Great job. Everything is trending down. The momentum is strong. It's breaking terminations. At 90, you're right here, and we're losing momentum, right? And we're into 30 flavors of trouble. But Pete got in up here, away from that trouble, with room to trouble, with all of these fibs, with all the triggers below, with all the momentum. Once again, pull back to an area inside of triggers, stop where the market shouldn't go, GTFO at trouble, 10 ticks, and if it doesn't stop, let it run. Everything started with momentum and path. Great job, Pete. For those of you that didn't notice, Pete has an X next to his name. He's been with Nexgen for a minimum of 10 years. He's been reading charts for a while. You may not be Pete yet. Not yet. All right, let's see what we have here. These two were not here at entry. The zones weren't there. Okay. Between the lines was, what's RB? LRB. Was RB on LC. Help me with RB, Andy V. These two Arby's, roast beef, red bands. Gotcha. Sell here as candle printed. Move stop loss. Followed it out for 590. Okay. Set first profit target here. Kept moving. Profit target is bar printed and followed with the stop loss. Nice trade. Everything said down. You had nothing in the way of the large chart. You got in on the correct side of the small trigger, so you didn't fight the immediate strength and just chased it as it ran. Nice job, Andy V. All started on here, right? When you decided to take that trade, it was just giddy up and nothing in the way. And this is what I like more than anything. Let me sing your praises for all to hear. His entry comes from below the small triggers, the weak side of the small triggers. Andy, you gave yourself a fighting chance because you didn't have an area. You gave yourself the highest chance of success to go with a large chart by not fighting the small chart triggers. Awesome patience on that entry. Great job, Andy. Good to see you posting again. Pete, you're so predictable. Everything says up, strong trending market. Let me get in after trouble because I don't want to trade into a fib that could stop the market. Let me get out at trouble, make sure I get paid in case that fib holds. And if it doesn't hold, let's see if we can't put a little extra in the kitty. Boring. Same thing every time. The market says up, there's nothing in the way. Let's find a way to capitalize. Great job, Pete. Trend trade, triggers are up. Price is on the strong side of triggers. Space galore to the next area. Small chart, price pulled back to an area and it shifted. That happens sometimes, Victor. Guys, you'll notice that these zones will change locations throughout the day. Price closes on the right side. Victor enters after the close on the correct side. And just money. Great job, dude. Great trade, Victor. I love that. There was an area here. Mark's going to go, Victor, you didn't trade from an area. Nicely done, son. Great job. Pete, directly into termination conditions. Gap theory in play. Boom. Bitch in the butt, Pete. Is this Pete? That's Pete. Little crude oil base hit. Oh, man. Gap theory. Termination. You pulled one over. Pulled one off. Didn't have the advantage of momentum. Triggers aren't wide. Didn't have a clear path. Huge risk with no room. Only 120. I'm glad you won. Guys, I love it when you win. I love it when you win. And let me say something real quick. let me say something real quick. When you win, every now and then, guys, when you got money in the bank, you might take a chance. You might go a little bit outside of high probability, medium probability. You're a little early on that one. I agree. Trend trade, triggers up, price on the weak side, space to the next area is okay. Manage. Small chart, price pulls back to the area, closes above. You take an entry. And I like it. You had that large chart trouble pinpointed, Victor, and you said, I got room to get back. Let's get paid there. Nicely done. Do you guys see it? First, it's up. He has room to trouble. He has the perfect entry. And look at that dashed line. He put the dashed line on the large chart trouble, so he knew where to take profits from the weak-sided triggers. One of the challenges people have is they believe that the weak side is low probability. It's not. This is a 15-minute trigger, guys. It takes forever for things to happen on that chart. Small chart gives the indication. Victor, really nice job on that one. All right, Paul. Triggers down. Transition. No clear path. Did you not have a clear path from your entry? 55? It was tight, huh? It was tight. It looks like you had at least $100 there. From 55.50 to maybe not 51, it's almost $100 worth. That's room to manage, especially when it looks like this. Look at that pullback to the area, close below, get in, find a way to make money. Beautiful trade, Paul. Close below. I mean, isn't that like the perfect look? Guys, that's about the sexiest trend trade look you'll ever get. That is high heels and fishnets for those of you that are into that. Just fight it all, says the pirate. Counter trend. White bar. Really shouldn't work. I love that that's the name. The really shouldn't work trade. That's like, guys, peanut butter and banana shouldn't really work, but they do, right? Raspberry jam on a Monte Cristo shouldn't work, but it does. Look at that termination. Absolutely no more shorts. Divergence from the termination. Definitely no more shorts. Let's see if we can get a bounce. And he does. He rides the bounce right up to the reversal bar marker. Guys, that is counter trend. That is fighting momentum. That is fighting everything. But it's a pattern that Ron did a lot of study on. And he said, man, there's these little quick opportunities before the market decides what it really wants to do. Great job, Ron. I used to hate this trade. Gave me heartburn. Wayne used to take one like this too. And we actually named it the heartburn trade. All right, Boaz. Odds favorable. 3 triggers. Pull back to the area. Should wait for the down bar over here, you said? Oh, right at the open. Just didn't get it. But look at that. Slipped on the entry. Take one off. Thought it was going to bounce at trouble. And then you just let it run with all that momentum. Let it run all the way to the fib. Absolutely beautiful, Boaz. Great trade. Great entries create manageable trades. All right, down to flat. Down to flat. You're in at 64. Weak side. Room to trouble. There's your pullback. No room. It breaks below. Exit after small triggers turn. Nice management. Trina, it's hard to tell. Guys, when you don't show me what happens before, if you only show me the entry bar, it's a little more difficult. Did that support ever break to become resistance? It didn't really, right? But it looks like it broke above to become support. Is that what happened? So you're not trading from this area, right? You're prairie dogging at support, hoping that it just goes from the weak side with, okay. How'd it work out? Great management. Way to not give much back. So this is where I ask you guys, do you need to hope like that, Trina? Not really. That's the I'm bored, I haven't had a trade in an hour. Let's see if I can make something happen trade. I know because I'm the king of the I'm bored, I haven't had a trade in an hour. Let's see if we can make something happen trade. Guys, we have been working really hard in this room on the idea that in order for this area to become resistance, which is what would support a down trade, it has to break and pull back. That's the logic for the trend trade. What happened, what had happened is it broke the other way, and it's nothing but support. So in order to really use it as a trend trade, it would have to break, pull back, and then go down. So that little understanding, I think, keeps you out of these I hope it go trades. Up, strong, room to targets. This was a risky entry. Should have waited to completely break area. It still would have made target. Losing momentum, so I got out, jumped the fudge in with momentum and nothing in the way. There you go. And then Trina, there is your momentum entry right there, right? Break, pull back. You just anticipated it. But here's the wonderful thing. Can I add a girl ya? And tell me if I'm right with this, because this is probably the thinking. Trina jumps the fudge in. I love that has stuck. I really do. There we go. Trina has jumped the fudge in. But what Trina says, with strong side, with room to trouble, with odds favorable momentum, I have trade rules met if they come and tap this zone. I know exactly where my stop goes if they do it. I'm just going to make sure I don't miss the tap if it happens. Bingo. Trina, that's a great chart read. And I think that your understanding of the momentum trade makes it easier to hold, doesn't it? Without getting freaked out at the little retracement. Awesome. Great job, Miss Trina. All right. Pure luck. Triggers down. Triggers down. Weakening momentum. Everything below resistance. In on the wrong side of the triggers. And it pushes way up beyond the triggers, as it does when you get to the wrong side of the triggers. For whatever reason, you kept awesome, huge amounts of risk on it. And it goes down. All right, can we do two things, Z-Robot? ATM was none, so I got lucky. Let me celebrate that you recognize that. But can we talk about a couple things? If price reaches Fibonacci resistance and all of the triggers are down below it, what's the most likely outcome of Fibonacci resistance? To stop the market, right? Absolutely no long trades. Price reaches a mid-band, the triggers are a full bar away and down. What's the most likely outcome of the mid-band? To hold, to push the market down. Your entry is a little aggressive for the NASDAQ. It wasn't pure accident? Good. I see a lot of reasons to go short. Can I give you just my little 2 cents on your entry, though? When you're losing momentum, why do we get in at the low area? Because the momentum is strong, right? That's the whole thought process between getting in low is because there's so much momentum, I don't want to lose it. So if I don't have momentum, And I've got fibs, and dude, you traded right into fibs. Waiting for a close below those small triggers gets you in at a way better price. It establishes your risk. If you never get the reversal bar, you avoid the loser. And then once you're in, it's giddy up. It is nothing but down. Does that make sense, Z-Robot? I like the large chart read. I think it's a good reason to look for shorts. I really do. But when I'm losing momentum, when there's a fib present, that reversal bar really helps manage risk. It really forces the small chart to go in the direction. So then if this doesn't stop, you don't lose $1,000. If that doesn't work, you're out a couple hundred. It's a good chart read though. I like it. Guys, you don't have to take high probability trend trades for me to like go, wow, great job. Great chart read. Super awesome. Estefania. I love saying your name. Estefania. Everything up. Weak triggers, but the trend's still strong. No such thing. Estefania, can we address that? So guys, you're going to see it in the room a lot. What is a strong trending market? A strong trending market is 30 plus bars in the same direction with no reversal bar. Estefania, it reset right here. It reset. Does that make sense? I'm just doing that for a language thing. So that's the clinical definition. Now let's go to the 74 flavors of awesome that you have working here. Every indicator is up on both charts. You have absolutely nothing in the way on both charts. You have odds favorable momentum on the chart you're using for entry. You chili dog it, which means that you just jumped in and you were so willing to make money. Estefania, you did it wonderfully. You really did. You did it wonderfully. Everything about this trade makes sense. I just wanted to make sure that when you call a strong trend, that it fits the actual definition of a strong trend. Because if you believe it's a strong trending market, and maybe you just start buying mid bands arbitrarily, it can affect the overall accuracy. But I mean, just great. It's a beautiful chili dog. If you look at the picture that Ron gave everybody for the chili dog, and he was nice enough to share it in the room. I'm going to show you the picture. It's your trade, Estefania. 100% it's your trade. You took the mirror image from the training picture that he presented in this room for everybody. Great job. Great job. Pablo. Triggers down, in transition, little bit of room, pull back to the area, get in with the close below. That one just didn't work, did it? Just didn't work. 1575, 1575. Sometimes they don't. I would take that trade. The only challenge that I really see in it is these triggers are up so strong and they've already reached their areas. Slippage got your entry there too. Yeah. Man, I had that earlier. 10 points. I got slipped about 3 points this morning. I was showing John the picture. I was like, man, my entry was so good. They didn't give it to me. It fits everything that we look for, Pablo. Stop makes sense. Entry makes sense. Just didn't work. So let's not call it a loser, right? Let's call it the perfect trade that didn't work. Let's call it a great trade and the market was wrong. Stupid market. You weren't the only one that saw it. Close below. Stop behind the area and the pivot. All right. So Phil, and Phil, you said stop placement, right? That was your question. So let's do this. When we're talking stop placement, and you're missing large triggers on your small chart, just so you know. If you had had those large triggers, you would see that that was odds favorable momentum against you 100%. But that's okay. That's neither here nor there. If I'm looking for a short trade, what am I saying? I'm saying that the large chart is going down. I've got room. Life is good. But the small chart has begun the fight up, right? And they didn't give me an entry here. And they didn't give me an entry here. And they finally give me an entry here, right? What does that mean? That means that the buyers failed. And the small crowd gave me an indication that they want to take over. Does that make sense, Phil? I want my stop right above their failure point. I want my stop just above that pivot high because that is where I can define without question the buyers lost everything they had going for them and the sellers gave me a rules-based entry. And what happens is you don't say things like, well, if this one fails, the VWAP's got to hold. And if the VWAP fails, that purple zone's got to hold. And if that purple zone fails, well, then that green zone surely has to hold, right? No, let it die. You can always take another entry. You can always take the next entry. Yeah, I've done it. I've done it. Does that make sense, though? I like to talk about I like to do that whole let me make up stupid stories about what the market's actually doing. And guys, they're just stories. They're like fables. They're like talking pigs. That's the failure point. That's where the buyers couldn't do it anymore. So I just want to be behind there, right? That's the failure point. That's where the market shouldn't go. Because if it does go there, it just means that the sellers didn't take over. It means that the buyers didn't lose. And then who knows? Good look, though. Same look as Pablo. Good look. Great trade. Everything says down. Lots of room. Life is good. They just can't all work. That's the bummer. Wayne says, heartburn, did I hear my name? Trend is up. Strong side of the triggers. Room to targets. Momentum. Closed above. Doesn't really mean anything. Waited for a pullback. That I love. Put a buy stop 3 ticks above the zone. That's where it finally gets you. So it's activating on the way up. There's your momentum trade, right? Just catch it on the way up. Out of trouble. 2 off at the bottom of the zone. Last one off at this zone. Nicely done, Wayne. You catch it on the way up. So that one, it closed above, but it didn't break above, right, Wayne? Closed above, didn't break above. Didn't even close above. Closed below, closed below. So resistance is very much resistance here. What is this? This is a breakout. It's a breakout trade. It's a oh my gosh, I'm on the strong side. I've got room. I've got odds favorable. I'm going to try, if they get above this zone, I'm going to hope they break out and don't get back below it. You meant for number 6 to be break the zone? This one right here? Oh. Well, I can't see your next slide, silly. Momentum counter, odds favorable momentum. It went right to trouble. Didn't believe it. And then you said if I'm going to lose money short trading into areas, too effing early. There's the close above. There's where it breaks. There's your momentum. Boom. So that's what you and Trina are in cahoots, right? There's my I hope it breaks. There's where it actually breaks. There's where rules are met for a momentum trade. No reason to panic. And just out you go. I love this. Guys, that is the I hope this area breaks. And then that is the okay, the area is broken. With all this momentum, the rules are met for a momentum trade, which means that my stop stays below the zone. And if it fails, I'll have to look for a trend trade, and then off it goes. It's making sure that if the trend trade doesn't set up, you're in the trade. Does that make sense, the way he did that? All of the rules are met for a momentum trade. This is him making sure that he doesn't miss it if they don't come back for him, which means that he may have to sit through a little retracement. I like it. I like the thought process on it. Good job. 3 divergences say, I dare you to go up. Big Red Fib says, I dare you to go up. Ron says, well, let's go see if we can do that. White bar really shouldn't work trade again. Divergence from a fib. Take an entry. Get out before things go south. Hey, take care, Wayne. Thanks for popping in. Good lessons. Good lessons. All right, Phil. Triggers are still down. Pulls all the way back to the zone. Closes below the zone. And you said, you know what? I'm going to take a shot. And it makes it. Nicely done. And there was like, but he traded into a zone. No, he didn't. He traded from 15 points above the zone. There's his close at 11. Zone's not till like 01. Had trouble. Well, you kind of traded into it here on the large chart. You didn't have room. But with these triggers down, it's still down, right? It makes sense. Nicely done. Nicely done. And then when it breaks, that one holds. Great stop placement spot. Let's see if it goes. The momentum trade is your current favorite. I like it. I don't care for momentum trades. I just don't. And I don't know why. I don't have a reason. I believe in them wholeheartedly. I really do. I just think that for me personally, my own frame of mind, I like the trend trade better. I love the idea that the buyers failed. I love the idea that I can get in on the weak side. And because what happens is if your momentum trade fails, it typically turns into a trend trade. And you like the low risk. You like the small number, right? I like not giving back so much money. I get it. And I'm just not the opposite. My thought process is that if I have the perfect trade, if I've got direction, if I've got room, if I've got the perfect entry, I don't have any risk. I might lose money if it doesn't work, but I have an advantage. I have an edge, and you do with the momentum as well. I prefer this trade. It's just, I like brunettes or whatever, right? It's just we all like what we like. I don't care about the risk number. Like that, the cost, the dollar amount means nothing to me. And it took me a long time to get there. Just, I don't want to sound like, oh, I'm such a cool guy. It doesn't freak me out. I am so sold on the idea that this wins more than it loses, that when it sets up, I don't care what the risk is. I'll put my stop where the market shouldn't go. Now, that being said, if this is my entry and I can't get in till all the way up here because it's a giant bar, well, I don't have room to make money. It doesn't make sense, right? But when it sets up the way I need it to set up, when everything is there, when the angels are singing, I don't care if it's $100 a contract, if it's $200 a contract. I trade a 4-lot when I trade Renko, and I almost always have at least $650 of risk on my trade. Almost always 600 plus. It's just one more reason to make sure you're taking the right trades, right? Phil, if you would have managed your first trade less loosely, you'd be at your daily goal. Yeah, and if I were a better looking man, I would show you guys my face instead of just the microphone. So, you know, ifs and buts, candy nuts. But that's good. Actually, Phil, I'm trying to make funny jokes, stupid jokes. But you're absolutely right. If you had used the pivot high here and not the I hope that breaks. So I'm making jokes, but that's actually a great lesson, guys. When you go back and look at what you've done, what could you have done better? Right? What could I have done better in that scenario? Well, I could have used the pivot high. I could have not traded into a termination condition. I could have waited for the reversal bar because there was so much risk. You can always analyze your trades, guys. You should always analyze your trades. Every time you take a trade, you should take a picture. Every time you take a picture, you should take a picture of your entry. You should take a picture during the trade. You don't have to annotate it in the moment. You should take a picture when the trade is done. And I think even more importantly, if something went wrong, I take a picture 10 bars later to see if I missed something, to see if maybe my management made sense, to see if maybe I jumped ship too early, if maybe I jumped ship too late. So the S&P right now, do I have odds favorable momentum? Let's do a large chart read. Do I have strong triggers? What do you guys think? Smalls have returned to and worked their way inside of the large. Does everyone see that rule number 1 is not met? It's not met. All of my triggers are above support. So I have no momentum, right? I have no clear path. Do I really need to even look at the small chart? Do I need to let that siren song talk me into something because it moves fast, because I get excited about the ticks? Oh my gosh, it jumped down quickly. Guys, look at that. This is why we have rules. I can't stress this enough. You don't have to take a pullback to an area inside of triggers because the background is red, because the triggers are red, because the fib was red. You don't have the first two advantages, guys. That is more likely to lose than win, and it lost. And now we're in a holding pattern. Trust. I did a video yesterday. I don't know if you guys watch the YouTube videos. I did a video yesterday talking about using a professional trader mindset, talking about thinking in probabilities, thinking in terms of advantages, thinking in terms of I'll never know whether it's going to win or lose. I only know if I have an edge, an advantage. Guys, that's kind of where we're all trying to get. And it's work. It is certainly work to get to that point. The fewer moving parts you have, the easier it is to get to that point. The fewer trades in your plan, right? The less opportunity you give yourself for mistakes, the less likely you are to make mistakes, I think. All right, so we're at a point where we're through the pictures, guys. It's all live trading now. So if the rules are met, and let me pull up my checklists so you guys know what we're doing here. For the remainder of Classroom, and we'll take breaks to look at posted charts. We'll do the S&P on the Renko, and we will do NASDAQ on TradingView. So on Renko, if I have strong triggers, if I have no terminations, if I have an area for entry inside of triggers, we will pull the trigger, we will manage for educational purposes. If I have the potential to break with 3 triggers from a strong top or bottom, termination that reverses the market, with odds favorable momentum on the large and small charts, and if there's no divergence, we'll take the entry. On TradingView, clear path, buy or sell a close on the correct side. This is my criteria for pulling the trigger in front of you guys. If it's met, we'll do it. And we won't worry about what happens. We'll just take it, we'll manage it. I had a feeling, Ron. I had a feeling you would be in that trade. Termination, multiple divergences. Let's get in and see if it works. And it worked. Again, quick profits. That's funny. When I was talking about no short trades, I thought, man, that's Ron's entry. Ron is probably in that trade. And why does he take quick profits? Because big triggers said, man, we're going up, but we're not going up for long. You guys see it? Great job, Ron. Consistency. Looks exactly like the last one. All right. Directly into Fibonacci. Can we agree that to look for a short trade, we should probably get below trouble? You guys comfortable with that? I'm getting momentum. I need 3 triggers below that fib before I even think about looking. I've got one line. That's a good lesson for triggers, not price. Exactly. Triggers, not price. I've got one trigger line through. Let's see what happens. 2. Uh-oh. Uh-oh. That's only 2 trigger lines. That's not 3. My rules aren't met yet. But if I got a pullback, there's a fib right there. Those are on the wrong side of the triggers. Let's see what happens. And the rules say no divergence. Let's see if divergence prints and affects this. I won't know until 2.5 bars up. That would be a momentum style trade right there, trying to anticipate the breakout. That's what Wayne does on TradingView. And if that momentum trade fails, very often they turn into a trend trade. Now I've got 3 triggers through. I can't enter unless I know whether or not that divergence prints. I won't know for another bar. It might go without me. This might not be my money. If you took the momentum trade, you're feeling pretty good about it. 3 triggers through. I like it. Don't you touch that fib. Nope. It's off the table. Off the table. Now we got the next line. Now we have to wait again. Does that make sense? That's what trading is. Obviously, I'm talking out loud because you guys are here, but this is how I would do it in real life too. That's momentum. That's 3 triggers through. That's an area inside of triggers. The only thing is I need to make sure, well, there goes my momentum. Dang it. Now my area is not inside of triggers. Shoot. I don't have a trade. I don't have rules met. But Mark, what if it keeps going down? It's going down without me. But Mark, what if a loss of momentum doesn't create a bigger retracement? Well, that's cool. The reality is I don't care what happens next. Estefania, are you in here? Is that a strong trending market? 30 plus bars in the same direction? Sure is. So we can turn it into lessons, right? Just because I'm not pulling the trigger doesn't mean I can't be smart. From a strong trending market, very often, if you don't have a termination condition, this isn't in the KISS plan, I can't take it. It says sell the midband until it stops working. In a strong trending market, sell the midband until it stops working. You guys want to see if this is the time it stops working? If we know, it'll run us right over. Just kidding, it doesn't fit the KISS plan. I can't take it. But that is conventional wisdom. It's not in a plan that I give. If you adopt it into your plan, that's on you. That's something that you're comfortable with. Me personally, I prefer areas inside of triggers. I like to know where the market may retrace. I like to know where it may bounce. I like to know where the trend may continue. And I like it to be a little more definitive. There's your midband. Oop, still going. Oop, still going. Ah, still going. Strong trending market's over with the reversal bar, isn't it? All my triggers are below resistance. Small triggers are up. Large triggers are down. Odds favorable on the small chart. I don't have any rules, Matt. Large triggers are below the reversal bar marker. There is a chance they'll close the gap to it. But from where? Will it be this fib? Will it be the mid band? Will it be that fib? Will they just keep going and keep going and keep going? I don't know. I don't have rules. I don't have rules. What do I do if my rules aren't met? What do you do if your rules aren't met? MSN games, baby. Let's go play poker. Let's go play a little blackjack, right? Let's go play solitaire. Let's play Scrabble. I don't have to predict. My crystal ball is broken. I pay extra, Justin. Justin, you are at 9:53 a.m. Central Standard Time Zone. I am at 10:53 a.m. Eastern Time Zone. So what happens, here we go. This is a great, oh, there we go. I just crashed. Thanks, Justin. Just kidding. That wasn't you. That was Ninja Trader. But check it out. Let me find a picture real quick. So when you open your software, everybody in the room, it does it for all of us. When you open your software, your system goes back 10 days. In that 10 days time frame, it measures every swing. It measures every up, every down, every pivot. It does every Fibonacci calculation it could ever come up with. And from all of these calculations, not only on one chart, on higher time frames, on lower time frames, it creates within the algorithm all of these calculations. Well, my midnight, Justin, is 1 hour before your midnight, which means I have an entire hour's worth of calculations. So while yours starts right here at the arrows, my calculator is adding all of this into the mix as well, which means that when we're in different time frames, we have different midnights. When we have different midnights, there's a good chance we're going to have different Fibonacci areas. Does that make sense? So if we're different, you have two choices. The first choice is that you can switch your computer to Eastern time frame, and we should line up. The second choice is that you trade your charts and just do yours. Well, I know, because here, let me get my Ninja Trader up real quick. I have support lines where you didn't because the software is nothing more than a calculator. And Justin, if your midnight is an hour after my midnight, my calculator has every calculation for multiple time frames and probably hundreds of pivots before yours ever starts. So when we hit the equals button, we get different answers. Oh, I guess I should get some data going here, huh? It can also be affected. Here, let me do crude oil because it loads faster. Hold on one second. It can also affect it the days back that the software looks. Does that make sense? Or is that that doesn't make any sense at all, but I hate it when people know that I don't understand. Damn it, it just crashed. I may have something corrupt in crude oil. We'll try it one more time. We will try it one more time here real quick. And I'll keep my hands off of it and see if that helps. And I'll show you, sounds, okay, no worries. Yeah, I've got something corrupt in crude oil. That's what killed my Ninja Trader. So let me open it up, not in crude oil. And while that opens, Justin, I'm going to try to come up with, because I'm not a techie guy at all. I'm really not. And because I'm not a techie guy, I may have to, yeah, okay. Guys, if you ever try to open the same workspace and it keeps crashing on you, delete the workspace. There's something corrupt in there. I'm going to give it one more shot. And I'm going to show you how it was explained to me. And maybe that'll help. So essentially, hold on one second. So that's 1 day's worth of pivots. So inside of this 24 hours, there's all of these ups, all of these downs, all of these ups, all of these downs, all of these ups. And this is only one time frame. So Justin, if your software takes every one of these ups and downs, does the math, and creates fibs. Does that make sense? And you don't have to know the whys, but it does. It takes every one of them. Uh-oh. No, it's okay. You do. So check it out. If every one of these ups and downs equals your fibs, that's the easiest way to do it. What happens if you take an hour's worth of ups and downs out of the equation? Your answer is going to be different. And that's what happens when we're in different time zones. What happens if you only take 5 days instead of 10 days? Your answer becomes different. It's just a calculator. And it's that calculator that creates the fibs. So there's nothing wrong with your software. It's just a matter of what it's using for the inputs. And since we're in different time frames, I have an hour's more worth of input. We can alleviate it if you want to change to Eastern, then we could probably have the exact same look. And it's not that Eastern is better than Central. It just means that we may have different opportunities at different times. And then, Phil, how do you get that page in TV? If you're on a live account, I don't think you can get it from AMP, but it's balance history is the sheet that Wayne is using. So maybe he's in simulator and then copying over. I don't know. You'd have to, maybe Wayne is still around, can answer. But it's balance history when you're in paper trading. I don't think from Apex. Yeah, so if you're in Nexgen Pro Trader Funding or something like that, I don't believe that's available. No worries, Justin. And then if you need help with that, just have Jason and Tech help you out with it. It's one of those things where it's kind of a mind mess with people when they see something different in front of them. Tried the momentum trade and it failed. Oh, it sure did. All right, Boaz. Let's talk about how smart you are real quick. The momentum is strong. 3 triggers through. So Boaz, the one thing, it's paper trading that does it. Boaz, give me a Y if you see that you don't have strong triggers on the small chart. You don't have separation. So I'm going to John Novak you real quick. Hey, Mark, says John, how can you take a momentum trade without momentum? In that one phrase that annoyed me so much when he told it to me, kept me out of that trade. And that's what he told me, because Boaz, I took this trade 100 times. Without strong triggers, I can't take a momentum trade, which means that's my trade. Whoops. Which means that momentum trade is off the table. My trade is a trend trade. The exact same trade. And it's that one little thing, that strong triggers. And do you remember in the KISS plan, if it's only the potential to break, you have to have strong triggers on the small chart as well? So it's a good one. I totally get the attempt. It makes sense. That one little bit will help just a little bit. But the hold is perfect because you said, well, if it fails, it's just a trend trade. So the way you handled it is beautiful. I might have just added on down there, to be honest with you. You'll see Pete do that a lot. Pete will say, I'll try the momentum trade. If it doesn't go, I'll put 2 more on for the trend trade because it's perfect. Good stuff, Boaz. Or you just keep your 2 contracts. Or you take 1 contract on the momentum trade, right? And then see what happens. Oh, gee, there's your gap theory again. Bad top, mid band, full bar away. If you thought you were going short, it ran you over, right? I think I got the first one, didn't I? Maybe I didn't. Is it this one, Boaz? Momentum. Is it really a clear path? Hold on. 64.50. We're missing a fib there. All right, starting to break. This time you have momentum. And the momentum trade works, huh? Right at the fib, strong triggers, breaking through. That's the one that's more likely to work because you have the momentum to push it down. And I like it because you let it go, start back up to the fib. It's so subtle. It's such a small difference. But with strong triggers here and strong triggers here, that's it. That's your reaction at the fib. Nicely done. I like that one. And it's such a different look. But if you were brand new, that looks exactly like that. And you're like, well, what's the difference? The difference is the separation between the small and large. Nicely done. All right, Miss Trina. Trend is up. You have room. Strong side. Pull back. There's your entry. Didn't work. Just didn't work. Stopped out. What did it do after? At 1040. What did it do after? It went down? Okay. Did price break this area? It went up? All right, hold on. Oops. We're going to do some investigative. Okay, so this was your trade right here. That's it, right? It is. Maybe not. But we can still use it for the lesson, right? So Trina, this set up, this had room, life was good. Here we go, right? There's your pullback. That's where the sellers failed. That's where you entered the trade. This isn't your trade. So the idea, Trina, is that your stop goes below where the sellers failed. $10.35, $10.40. 10.20, 10.30, 10.40. There's your entry. There's your stop. You still would have been stopped out. $74, $76, $76. We may have had different zones. But that's your stop placement. I don't know. I would have to see it in the moment. It's hard to tell historically, right? Because it looks like you got in just above the zone and it's odds favorable. I don't disagree. Because it's coming from there. You did it late. Okay. You manage your risk. You manage your risk. You're just saying, man, if it doesn't go up, I don't want to be a part of it. That's okay. I just wanted to look at the big picture. You had a reason. I always like to look, right? The one thing that I was asking, you got a bar that both opened and closed below the zone. Support, 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 break, resistance, right? I'm wondering if this little pattern is going to help you guys. Here it's support, there it's support, there it's support, and when it breaks below, doesn't it become resistance? And I'm working through this, Trina, so thank you for being patient and me using your chart as it. But I'm really starting to think there's a lot to this one. If it pushes too deep past the area I'm hoping to trade from, I think it takes my trade off the table. Down, weak to transition, room to trouble, pull back to the area. Close below, made target. So you're in at 17. Why not end up here at the, oh, because that's not a close below, huh? All right. That's super late and super tight. But you made it. Nice job. You had room. Below everything, hoping it goes. I like it. It's, is it okay? I guess let's ask ourselves that. If I am $800 worth of distance away from the correct entry, sometimes I just got to say, I didn't get my rules met. And Trina, I love that you got paid on this one. And it was all going down and you had room and every indicator was down and you got in below trouble that was still support. But that's your trend trade. Sometimes it just doesn't set up. But you leaned into being on the right side of everything, and it worked. And it's an interesting. I don't know that I would call that a trend trade. Trend trade's a close at the area. This is there's my trend trade. It didn't fit my rules. What was the goal for my trend trade? It was that right there. That's where I'll get paid. I'll see if I can catch the second half of it. And I'm not saying that there's anything wrong with it, but it changes my thinking a little bit, right? If I were in the trend trade up here and everything broke below this zone, I might put my stop behind the zone. That might make sense, right? I'm halfway through a trade. I'm hoping that it goes there. That's where I'll protect myself. So you can start using that original trend trade expectation, where you expect it to go based on your indicators. And if you get in halfway through, it's just kind of a late entry for a trend trade. I like it. You put it at the HVA line. So at the HVA line, You put it at the HVA line. So one of the things, here's a good lesson, I think. Behind the HVA where? Up here? Okay, cool. One of the cool things, so you remember the white bar lessons that we were talking about? Highest concentration of sellers is highest concentration of sellers. That's your high volume area of this this bar that's going down. See how it opened below it, and that's where you took your entry? Very often, if they're going to keep down, and I'll use this for mid-trade management, Trina, and since you jumped in mid-trade, maybe this works, right? I'll give it a little bit above that HVA, but if they start getting back above where the highest concentration of sellers is, I'll wait for a better entry. But I'll use this if I'm in up here and everything is down and I get that second down bar and the high volume area and the open below, I'm like, that's my line in the sand. That's a little more advanced. Yeah, that's where I get an okay instead of a, oh, I get it. But I like it. You're like, let me hide behind something. Good stuff. Right on. Termination says just no trade, right? Despite the momentum, no trade. Ron made money there. Might have made it there too. We've got about 30 minutes, 40 minutes, guys. What's TradingView say? Ninja Trader says smalls could go up. They could go down if it continues down. Do you guys see how it's in that little waffle stage? If the market continues up, those triggers, this bar will finish, they'll actually be up. If the market decides to go down from here, those will never turn up. They'll look like this. Does that make sense? This is a good lesson. I won't know for sure. I won't know for sure for another 14 minutes, which means that if I can't tell what it's going to do, I should let this chart really support whichever direction I choose to go if I decide to take a trade. Does that make sense? If I can't tell if this is up or down, this chart should be rock star solid. Large triggers are down, small triggers are up. Area, area. This is one of those times where I might just sit on my hands. Where I might say, man, I'm going to force them to figure it out before I try to guess what they're going to do. Now, until those small triggers actually officially roll up, they are down. But there's no room to go down, so that kind of comes out of the equation. And since they're not up yet, and even if they are up, I'm on the weak side, I don't have much room to go. See how I could make a case either way. I could be short from here, in which case I'm on the strong side and maybe I'm holding my position. Because until they roll up, they're not up. You're exhausted trying to levitate the market. Let them do the work, Paul. Let them do the work. Does anyone have a wife that cleans the table at the restaurant? Am I the only one? You do it, Trina? My wife will stack plates and wipe tables. Hell, if she could refill the salt and pepper, she would. And I'm always telling her, I'm like, let them do it. This is what they're here for. This is why we're tipping them. Let them do it. And after 30 years in the service industry, 99% of you can't stack plates right. You leave spoons and forks under stuff. So Trina, you probably know, yeah, I waited tables forever. I can stack some plates. But most people can't. And because they can't, all you're doing is making life harder. Let them do the work. Let them do the work they're good at. I don't know. That's probably a bad analogy, right? And my wife was a horrible waitress, which is an even more reason. Leave it alone. Leave it alone. Teamwork. I'm not on their team. I'm not on their team, Paul. When I go out to eat, I want you to put my food in front of me. I want you to pick up my plate when I'm done. I want you to keep my drink full, and I will pay you handsomely for that little bit. That's your job. That's your role, right? Yeah. I would never make it. I was a GM of a restaurant. I would never make it anymore because I don't think service is what it used to be. I used to tell my kids, I was like, if you can't make money as a waitress, go to retail. If you can't make money as a waiter, go to retail. Stop expecting people to tip you. You suck. Just get out of the business. Go away. There's a lot of people that should be in retail, in restaurants. Man, they still don't know, do they? They still don't know. The kitchens are bad also. After 36 years of marriage, we divide our chores. My wife cleans the bathroom and does laundry. You sweep, mop, and dust. Clean the house. It works great. That's awesome. After almost 30 years of marriage, I just do what I'm told. I tend to cook. I do cook. I like to wash my own dishes. My wife is very detail oriented, but I'll do like the broad sweep, and then she'll come behind and do the fine tuning. Tools in a toolbox. Dad and I worked out of the same toolbox. Could always go and grab the tool you needed because it's always put back in the same place. That's awesome, Andy. I have bought about 173 10 millimeter wrenches because my kids can't put them back. Mine too, Victor. Mine too. Trina, Wayne will appreciate that. Ask Wayne how many 10 millimeter wrenches he's bought in his life. The answer is probably 40 or 50. Wayne likes to cook, you clean? Yeah. I love to cook. I love to cook for people. My wife is in Georgia right now, and I'm starving to death because if I don't have someone to cook for, I don't cook. I need my kids to come over tonight or something. He has way too many. You can't have too many tools. You cannot have too many tools, Trina. That's like saying, I've got too much awesome. Claire, you like to cook for people, and if there's no people, you don't cook? Guys, this is what you do when your rules aren't met. You just talk, right? I don't have momentum, not up. Well, I do have momentum down. I don't have a clear path down. There's no reason to look over here. Things have to change before I can take a trade. I'm in the dead smack in the middle. I don't have a trade. You've got enough there for 3 mechanics and keep adding more? Yeah. When I was working on motorcycles, I had a pretty good set. When I had children, half that set disappeared. When I moved back out of the house, I rebuilt my set. I've got enough. I could rebuild any engine you put in front of me. But it doesn't take a lot of tools to do that, oddly enough. I don't have the spine to bend over a fender anymore, though. Shorts aren't working. Don't have what I need for longs. Just doing nothing. Just doing nothing. Just relaxing. Boaz says time to move to the NASDAQ. 11 a.m. Is it smoother now, Boaz? Let's go look. You just got a beautiful half-inch torque wrench, a great clicker. You know, I have a torque wrench, beam style, Jeffrey. I've had it for 28 years. 28 years. And it works as great as the day I bought it. I do like the clickers, but I've got an old school torque wrench that I've had for almost 3 decades. And it still works. Amazing. All right, let's see what the NASDAQ says, Boaz. Gotta let it pick up. Guys, what do you want to talk about? What can I help you with? I don't have rules met per any of my checklists to take a trade in front of you, which means I'm obligated to not take a trade from the mid-60s. My dad does too. So my dad and his dad all bought Craftsman back in the day because of a lifetime warranty. My dad had a Craftsman, actually I think it was a torque wrench that his father had bought. And this thing was old. And part of it broke, like the beam broke. And he took it to Sears back when there was still Sears. And they replaced it, no questions asked, instant. It was probably 40 years old. I like that. Tools should last forever if you use them properly. All right, so what do we have? We've got momentum. 3 triggers through. Whoop, that's a termination. Can't do that one. So now I'm back to 2 triggers through. Strong bottom. All the momentum, right? I really need 3 triggers through, but it's only 2. Does that make sense, everybody? I've got 3 triggers through the fib, but I've only got 2 triggers through the pink 1-to-1s, which means that my plan isn't met, which means that I'm sitting on my hands. I've already got a divergence. That means my plan isn't met. Let's see what happens. 2 divergences with only the potential to break. Small triggers down strong. Uh-oh, look at that. Avoidable loser. How do we feel about it? How cool is it to be able to sit in front of you guys and say, hey, the rules aren't meant to go long. Look what happened. And now look, 2 triggers through. When you know your rules, guys, there is no stress. When you know what you're looking for, there is no panic. There is no I hope. You have to say Mortimer at the end of that. Sell Mortimer. No triggers through a divergence low. I don't care what the entry looks like. It's not my money. Momentum, no clear path. It can go down. It's going down without me. Second higher divergence, just getting worse. Man. Is it going to go up from here? Do you guys want to talk about why divergences are so strong? Why we respect them? And we'll come back and we'll see what happens. Right here, at this exact spot, the sellers were in control. And at that exact spot, the buyers said, no more, seller folk. We're going to steal your momentum and put a line in the sand in case you yahoos try again. Does that make sense? That's what this means. Look what happened right at that line. Do you know what the buyers said right there? We told you. This is why divergences are areas that can stop the market. It is literally the point where the sellers couldn't get the job done anymore. The buyers took over and stole their momentum and pushed it up. We've got the same thing up here. That was your fight right at the termination. They may go down, but there were buyers there. And it's those little hitches, guys, that can ruin your day. I still say no, but NASDAQ's a little quick for this room because that was a beautiful re-entry right there. But now we're losing momentum. So we'll see what the S&P's doing. They're trying, right? They're trying. They never rolled up. They never rolled up. Did anybody try to go long? Did anybody say, well, I'll try to go long? No. You might have got a little short term out of there with all the support, but you should have been aggressive because until they actually roll up, they're down. How long have they been down? They've been down since 8:15 a.m. And there have been pushes up, but they haven't been sustained. Two triggers through. Let's get a little push to get that third trigger through. Get that fib right inside of those synthetic triggers. Come on, ES. Give us a short. Give us something we can use. Whoop, that's my untitled workspace. Let's get rid of that. There we go. NASDAQ, strong trending market. Nope, not my trade. You hear me say that while looking for trades? What's that? Not my money? I don't know what I said. I can't be held responsible for what I say. Only two triggers. Not my best look. Doesn't fit my plan. Thank goodness it didn't fit my plan. Thank goodness it didn't fit my plan. My plan says 3 triggers through. I never got it. That's another avoidable loss. Oh, you know, Trina, I started with TradingView the same way you guys did, and I had to learn all those things because every time I say, hey, they're actually down until they go up, you're going to have to wait for the bar to close. It's because I've screwed it up 1,000 times. True story. And when we talk about it has to break and then come back, that's because I screwed it up 1,000 times. And it's kind of cool. Every time I mess something up, guys, you get one more arrow in the quiver without having to take the lesson. They usually stick better, though, if you make the mistake, post it in the room, and we have a conversation. 11:30 in the a.m. Boaz. Remember that one that I said, hey, that was a good one? Boaz said, yeah, it was. He waited for 3 triggers to get through, pulled right back to the mid-band inside of triggers. Boaz, gorgeous. What a great trade. And let me show you. Hold on. Man. Boaz said, can't do it, even though it looked like it worked. He said, can't do it, don't have a clear path. He said, but everything says down. And boom, they came back for you. Guys, that's knowing exactly what you need and where you need it. Boaz, that's just outstanding. Look at the NASDAQ. It is so fast. But price reaches support, there's your instant reaction, right? Price reach resistance, there's your reaction. That area of support has been there. Really? Hold on. Still there. Oh, I don't know, couple days. Did you guys know that the areas don't sneak up on you? They don't sneak up on you. It's there. It's been there. It's always there. You know it's there. You just have to choose not to trade into it. Should your plan reflect that need? Triggers are down. I'm on the strong side of triggers. If I get a pullback to an area and a close below, 76 represents the first line of trouble, which means in a perfect world, if I got an entry, it'd be somewhere up here. And as long as price doesn't break this area, this is my area of resistance, right? And if it does break it, that's my area of resistance. And that area of resistance doesn't give me any room to trouble. Trina, did I do it right? This will be resistance until they break above it. Phil, take care. Someone told me once, learn your trading plan well enough to teach it. Learn your trading plan well enough to teach it. Could you teach your trading plan? I bet most of you in the room, I would wager to say most of you in the room could teach strong triggers without hesitation. In a market that wasn't moving, dollars to donuts, you could teach termination conditions. Without the fear of winning or losing, most of you could teach entries. Can you piece it together and know it so well that you can do it without hesitation, deviation, or distracting thoughts? That's the goal. And only you know where you are. So if you're not where you want to be, let me know. I'll help. I'm going to end today's